Knowing when to enter the market is one of the most important skills in trading and investing. Your aim is to hop into emerging trends as early as possible in order to catch the maximum price swing. And one of the best ways to do this is by predicting potential trend inceptions on a chart. One indicator that can help you to do that is the Vortex indicator. So today we'll talk about a reliable trend following tool, the Vortex indicator, and I'll show you how I use it when I'm trading stocks. Before we continue, if you are new here, make sure you subscribe, turn on the notification bell, and leave a like to show your support. The Vortex indicator is a relatively new trend following tool that you may never heard of. This indicator signals the formation of a new trend or the continuation of an existing trend, and it can be used across all financial markets, although I use it mainly for trading stocks. The Vortex indicator consists of two oscillators measuring upward and downward movement, its development being inspired by the natural flow and vortexes of water that occur in rivers. You can see a vortex pattern in your charts by connecting the lows in the candles with the highs in the consecutive candles, and then the highs with the consecutive lows. The bigger the difference between the low of a candle and the next candle's high, the stronger the upward vortex. Likewise, the bigger the difference between the high of a candle and the next candle's low, the stronger the downward vortex. The Vortex indicator includes two trend movement lines plotted in a separate window, called the positive trend movement and the negative trend movement. The positive trend movement represents the distance of the current period high from the previous period low, and similarly, the negative trend movement represents the distance of the current period low from the previous period high. This indicator uses the average true range in its calculation, meaning the current high, current low, and prior close, to measure volatility. So basically, to keep it very simple, the Vortex indicator normalizes the positive and negative trend movements by dividing them by the true range. So we could say that it shows volatility adjusted positive trend movement and volatility adjusted negative trend movement. Like most indicators, the Vortex one can be used in almost all time frames and is market neutral. However, you will have better results when you'll use it on longer time frames, such as daily charts, because the price noise in lower time frames will produce many false signals. If you do use the Vortex indicator on a very short time frame, such as the 5-minute chart, I suggest increasing the indicator's value from 14, the default settings, to 21 or 30 to smooth out lateral price movements. Now, how to trade with a Vortex indicator. The Vortex indicator plots two oscillating lines, one to identify positive trend movement and the other to identify negative price movement. Crossovers between the lines trigger buy and sell signals that are designed to capture the most dynamic trend action, higher or lower. So the simplest signals the indicator generates are crossovers between the positive trend movement and the negative trend movement. When the positive vortex crosses above the negative vortex, the trend is up, and if the negative vortex crosses above the positive vortex, the trend is down. The crossover strategy works perfectly when there is a clearly defined trend. You can use the Vortex indicator as a standalone signal generator, but keep in mind that it's vulnerable to significant false signals in congested or mixed markets. So pay attention when the market is in a consolidation phase, because this system will generate false signals. To diminish the occurrence of false signals, you could adjust the settings of the indicator. Adjusting the Vortex indicator to longer periods will lower the frequency of false signals, but will generate delayed entries. On the other hand, shortening the period of this indicator will lead to many crossovers that fail to generate significant trend movement. As a general rule, stocks with high volatility will respond better to shorter term settings, while slow-moving stocks will respond better to longer term settings. As with most indicators, the Vortex one works better when used with other studies and filters like price action, for example. A first filter is adding a simple moving average to the chart to act as a long-term trend filter. You open long trades if the price is above the simple moving average and the positive trend movement crosses above the negative trend movement, signaling an active uptrend. You open short trades if the price is below the simple moving average and the negative vortex line crosses above the positive vortex line, signaling that a downtrend is underway. This way, you will not open trades that go against the long-term trend. A 200 period simple moving average is a good long-term filter. So here is a Tesla daily chart since the beginning of 2019. As the price stayed most of the year below the 200 moving average, only short trades were available. And here's Walt Disney stock during the same period. During the first 3 months of the year, we witnessed a lot of consolidation above the 200 moving average, and the signals weren't as accurate. But since March 2019, we had two big buys, one here and another one here. Another method to reduce false signals is to only place trades when either the positive trend movement or the negative trend movement are above the 1.1 level. The two lines of the Vortex indicator oscillate above and below 1, and when there's a crossover, it means that one of the lines goes above 1 or is very close to it. To increase your chances of trading when there's a strong signal, you could wait for the positive line to go above the 1.1 for a long entry and wait for the negative line to go below 0.9 for a short entry. And here's another filter you could use to increase this indicator's effectiveness. You take note of the candle where a crossover between the positive vortex line and the negative vortex line occurred, and you place a limit order at the high or the low of that candle. So you don't enter when the crossover occurs, you wait for the limit order to be filled. This way, the high or the low of the crossover candle will become the entry price of the trade. To make it very clear, instead of, for example, opening a long position when the positive vortex line crosses above the negative vortex line, you'll place a conditional order 1 point above the high of the candle where the crossover happened. Only if the price goes above that candle's high, the order will be triggered. As you can see in this example, there was a bullish crossover, but the price never went above the high of the trigger candle, so the trade was not opened. For a short entry, you'll place a conditional order 1 point below the low of the candle where the crossover happened. Only if the price goes below that candle's low, the order will be triggered. If you pay attention at this chart, you can observe a crossover here, but by using this filter, the trade never happened as the price went the other way. So you could save a lot of bad entries if you follow this simple filter. Here's another important tip. When you see multiple crossovers in a short period of time, this is a sign of market indecision with no clear direction. It's better to ignore the setup on that stock and search for other opportunities. Take a look at this example. During February 4th to February 15, we had multiple crossovers. That's a lot of crossovers in a span of 10 days. When you see this pattern, it's better to abandon the setup because the likelihood of a false signal is pretty high. Also, another clue is the distance between the two lines of the vortex. Look at the range during the analyzed period. It's pretty tight, and that's another sign of range-bounding markets. The vortex indicator can be used across multiple time frames. For example, you can apply it to the weekly and monthly charts to define the bigger trend and then apply it to the daily chart to generate signals within that trend. Using the daily chart, you could focus exclusively on bullish signals when the vortex on the weekly chart indicates an uptrend and on bearish signals when the vortex on the weekly chart indicates a downtrend. Also, you can use other indicators or price action in combination with a Vortex indicator to confirm the existence of a trend. The Vortex indicator is far from being a perfect indicator, and it has its strengths and weaknesses, but when used correctly, it could be a very valuable addition to your trading toolbox. If you enjoyed this type of content, don't forget to subscribe, click the bell icon and leave a like to show your support. Until next time.